Coming up on Business Incorporated today, South Africa's Aspen agrees initial deal to make J&J vaccine candidate. Kenya plans to tap Sudan market after US ended sanctions. And UK Labour Party urges Trade Secretary to end delays over Kenya and Ghana's deals. Hello and welcome. Thank you for joining us on the program. I'm Chibeze Obi Iwagu. We'll begin the show with intraday market numbers, which were mostly positive in Africa, except Nigeria's main index, which was unchanged. South Africa's JSE index jumped 1.10%, while the EGX30 in Egypt rose 0.45%. Kenya closed positive on Friday. It was a similar picture in the Middle East, where most markets advanced at intraday, except the Qatari index, which was marginally lower by 0.01%. Elsewhere in the region, Saudi Arabia's main index surged by 1.60%. In the UAE, Dubai's index rose 0.60%, while the Abu Dhabi index advanced 0.07%. And in Europe, stocks were slightly higher today as investors brace themselves for the U.S. presidential election on Tuesday and react to positive manufacturing data out of China. Well, let's get more from my colleague there, Conrad Busin. Hello, Conrad. Good afternoon. Good to see you again.
Good to see you, Chimmy, and thanks for having me back on Channels TV.
You're welcome. Well, it's a big week ahead of the U.S. presidential election. It affects not only the United States, but also financial markets worldwide. How are Europe's markets preparing for the event?
Well, Jimmy, parts of the preparations already have been happening on the financial markets here. The German share index DAX lost around about 10% in the course of October. And of course, there are many reasons behind this, but one of them for sure is the uncertainty about what to expect from this election and what to expect afterwards. In a situation like this, many investors really prefer not to have too many risky trades open, but on the other hand, they prefer to stay on the sideline a bit and see what happens. And not only until Wednesday, the day after the election. As you know, this election this year is expected to be one of the most contested ever, with, the US president putting into question the validity and reliability of mail-in voting, with parts of the United States public and media, at least, totally detached from facts. It's going to be very likely that we're going to see a heated discussion all week, and it's going to take a while until investors can concentrate on the things that they like to concentrate on, fiscal policies, infrastructure spending, taxes. No, we're going to talk about many factors which will cause a lot of uncertainty again.
Now, while the U.S. election will be dominating the media coverage this week, as well as the discussions on the trading floor, what other events are there worth mentioning and keeping an eye on this week?
Well, of course, here in Europe, the partial lockdowns which have been introduced by many governments are a big topic again. Of course, the discussion also is how long can we and our economies live with such lockdowns? Will we be seeing another lockdown every other month, maybe in the course of the coming winter? Or will the governments come up with more intelligent, more clever ideas how to deal with the rising number of infections? The question is, will it be possible to, protect the risk groups, elderly people, and at the same time help younger people, more resilient groups, to continue in their jobs? What's more, without the US election, we will probably discuss a lot about Brexit again. The negotiations have been taken up again. And for a change, shortly before the deadline, the two sides are a little bit optimistic that they can reach a deal. Last but not least, we have a large IPO this week, which is scheduled to happen on Thursday. Ant Financial in Hong Kong and Shanghai. It's going to be the biggest ever initial public offering. It will bring $34.5 billion US.
It looks quite heavy on the business scene this week, and we have quite a lot to chew there. Anyway, in China, manufacturing continued to recover in October as the key purchasing managers index reached the highest level since January 2011. What's the trend in Europe, where purchasing managers indices were updated as well?
The trend is positive in Europe as well, and that's the reason why, we are seeing a bit of a recovery on the German stock market today. The reading for the German Purchasing Managers Index is 58.2 points. That's a bit more than the average expectation. The Euro area Purchasing Managers Index is 54.8, also significantly higher than anticipated. And as you know, every reading above 50 indicates an economy that's growing. I have to say, though, of course, the survey leading to those purchasing managers indices was made before the new lockdowns and before so many economists started to downgrade their forecasts, while during the summer many economists had hoped for a V-shaped economic recovery. Now the letter W is back and with a vengeance. Many investors predict that the economy in the Eurozone and or in Germany will slow down to zero in the current quarter. Maybe we have to deal with another recession even.
All right, thank you, Conrad. We'll keep tracking those developments, particularly the U.S. election. Enjoy the rest of the day. And in the UK, it's the first chance for the market to react to the announcement of a further national lockdown. Shares in UK travel companies, retailers, pub chains and hotel operators fell sharply at the start of trading on the London stock market. Let's see what has changed this intraday with Juliana Olayinka. Hello, Juliana. Good afternoon. Well, travel, retail and hospitality shares fell in the morning. England's lockdown gloom abounds. Bring us up to speed with intraday market numbers. What has changed?
Well, very little has changed, but surprise, surprise, the FTSE all-share is doing pretty well at intraday. It's up by 0.45%. I think the biggest fall that we're seeing is on the FTSE 250, which is more domestically focused index, and the FTSE 350. As you said, there are no surprises. As we saw in the first lockdown, there are going to be winners and losers, and Ocado, Sainsbury's, Waitrose, Tesco's, they're all up this morning between 2.7 and 6% this afternoon, shall I say. And then, of course, as you said, the big airline industry, Rolls-Royce, the aerospace engine maker, they're all down. Now, ING, they are an investment firm. They've been giving their analysis across British media this morning. And I think one of the reasons why FTSE all-share is doing pretty well is because they're not expecting this hit the second time round. It is back to the first hit that we saw in April. If, and it's a big if these restrictions are just going to be from Thursday, the 5th of November until the 2nd of December, then they expect that the UK GDP will contract by 6 to 7%. That's what they're saying. But of course, it could go much longer, depending on if these new COVID rates start reducing. Worth mentioning as well, Chimuzé, that we actually got a revision down of the PMI manufacturing data. It was revised. We had a of 53.3. It's actually gone up to 53.7, but still much lower in October than it was in September, which really confirms that the upward momentum in this in the economy is shifting downwards. Just run you by some other numbers. Let's look at the British pound. At the moment, it's down on the US dollar by 0.20%, down on the euro by 0.22%, and down on the Japanese yen by 0.15% at intraday, Chimay.
In the meantime, clothing retailer Primark has warned that the lockdowns being introduced in parts of Europe will hit its sales in the run-up to Christmas. Is this Christmas disaster waiting to happen?
Well, it's happening as we speak, isn't it? I spoke to Bissy this morning about the fourth quarter, which was deemed the golden quarter, and it's going to be anything but that now, especially because all of these shopping days have been completely ripped to pieces. And depending, again, on what the COVID infection rate will be when the government do look at lifting the lockdown on December the 2nd, Christmas could well and truly be over. Associated British Foods, they're the umbrella company that owned Primark. They were the first kind of big company to say that this is really going to affect them. I believe they said it's going to affect them and cost about £325 million. And I think with Primark, even though they have done pretty well since all of these restrictions were lifted in the summer, is that they do not have an online presence. And as we're seeing online shopping really surge, they just don't have that. And is this a second lockdown going to be a final blow for what was the cheap and cheerful retailer here in this country? We just don't know. But again, they're the first to talk about how it will really affect them, along with Next and JD Sports. As soon as they made that forecast, their shares were down early trading at 5.5%, and intraday their shares are down by 2.7%.
All right, let's talk Brexit now. The Labour Party has urged the UK Trade Secretary Liz Truss to end delays over rollover deals with Kenya and Ghana to prevent them from being slapped with high tariffs when the UK leaves the EU on January 1. How much do we know about this?
Not much, I'm afraid, and for our viewers in Britain, they'll understand you don't really get much coverage on African news stories when it pertains to Britain, but it's an important story, and it's one that The Guardian are reporting. The transition period will come to an end at the end of this year, and Liz Truss, the UK Trade Secretary, has been having several individual negotiations and discussions with countries, Japan being the first that they signed this free trade deal. And according to The Guardian, if the continuity agreement is not signed with Ghana and Kenya before the end of the year, then apparently it could cost those two countries, as well as other African countries, about £2.6 billion in export and import tariffs. And of course, nobody wants that. We know at the beginning of the year, I was there, and we had a flurry of African countries and head of states here in the UK. Boris Johnson welcomed them just to emphasise how much he sees them in Britain's future post-Brexit. But this doesn't appear to be the case at the moment. It appears as if the UK, according to The Guardian, are using leverage to try and get the best deal for Britain and not necessarily for Africa, particularly where it pertains to ECOWAS, who usually trade as a bloc altogether. I'll just very quickly read a small part from Shadow Trade Minister Gareth Thomas. He actually wrote an open letter to his counterpart, and he says the terms of the continuity agreements you've been proposing would lead to new barriers to trade between both Ghana and her neighbours in the Economic Community of West African States, and similarly would adversely affect trade between Kenya and other developing countries in the bloc. So they are urging the British government to get those continuity agreements signed because we know too greatly how much those countries depend on foreign money to pay for cocoa farmers, banana farmers and other farmers in the agricultural sector.
Well, Julian, I guess in the midst of the Brexit issues and the lockdown issues, Britain is still keeping an eye on the U.S. election. So let's continue to track these developments. Thank you. And stocks in Asia Pacific rose today as data showed China's manufacturing activity grew in October. Mainland Chinese stocks saw gains on the day, with the Shanghai Composite marginally higher at around 3,225 points, while the Shenzhen Component gained 1.39%. Shares in Japan saw robust gains. The Nikkei 225 rose 1.39%, while the Topix Index jumped 1.81%. Meanwhile, shares in Australia advanced, with the S&P ASX 200 closing 0.4% higher. MSCI's broadest index of Asia Pacific shares outside Japan rose 0.58%. Okay, we'll take a quick break, and then when we come back, we look at Ghana's economy as well as other African stories. To stay with us. And South African pharmaceutical company Aspen Pharmacare says it has reached a preliminary agreement with Johnson & Johnson to commercially manufacture its COVID-19 vaccine candidate, sending its shares higher. The country's biggest drug maker said it had agreed to provide capacity required for the manufacture of J&J's vaccine candidate, which is still in clinical trial at its Port Elizabeth facility. The agreement with J&J will see Aspen perform formulation, filling and secondary packaging of the vaccine for the U.S. firm. Aspen's shares rose more than 4% on the Johannesburg Stock Exchange on the announcement. The company says it had invested more than 3 billion rand in the Port Elizabeth facility. South Africa has recorded more than 726,000 coronavirus infections, the highest number on the African continent, and more than 19,400 deaths. And in Ghana, the economy shrank 3.2% year-on-year in the second quarter of 2020, following a 4.9% growth in the previous period. It was the first economic contraction since the second quarter of 2016 due to COVID-19 and related containment measures. The country has started to gradually ease lockdown restrictions in May, but many businesses across sectors remain shut. Matt Keniger, Associate Practice Lead Sub-Saharan Africa at Docker Frontier, has been tracking developments there and joins us now. Hello, Matt. Good afternoon. Good to see you.
Hello, good afternoon. Thank you for having me on the show.
So Ghana's economic contraction in second quarter was relatively mild. Why was this, and were there any sectors that stood out for you?
Yeah, so Ghana's contraction in Q2 was actually quite soft, as you said, compared to other markets such as South Africa, Nigeria, or Kenya. And this is likely the result of COVID-19 restrictions being relatively light compared to other markets or other leading markets in Sub-Saharan Africa. Ghana was also fairly quick to begin lifting COVID-19 restrictions, although they certainly are not all lifted now. We were surprised to see them lifted quite early in Ghana. So this has probably supported commercial activity. And what we have seen actually is a fairly healthy bounce back in business sentiment in Ghana, despite the ongoing coronavirus pandemic. According to the Purchasing Managers Index, which is a survey of business sentiment, the business sentiment has reached pre-pandemic levels already. So it's quite upbeat. And in terms of the outlook for the performance of certain sectors, so agriculture continued to grow despite the contraction, but we did see pretty significant contractions in hospitality, unsurprising given the restrictions, but also manufacturing and mining performed particularly badly in Q2. So those were some sectors that stood out.
Now, to what extent will the economy's performance this year affect the outcome of the election next month?
Yeah, so we've been watching this quite carefully because it's quite a major election. Our base case before the coronavirus pandemic was that Mr. Akufo-Addo and his NPP was going to be re-elected based on fairly healthy economic performance last year, and we were expecting strong growth this year. But now the coronavirus pandemic and the weaker growth outlook does upend the election a little bit. So there is more uncertainty around who will be re-elected. One of the reasons is because the government has really been unable to push ahead large infrastructure investments and also hasn't been able to increase civil service wages as much as it wanted. So definitely the election is a lot less certain and it will be a lot more competitive.
Now, looking ahead to 2021, how do you expect the economy to perform and what are the risks to the outlook?
Yeah, so Ghana will have a bit of a mixed picture next year. So we are expecting the economy to grow relatively healthily next year, so around about 3 to 4%, although this is not as rapid as other markets such as Kenya and Cote d'Ivoire. And part of the reason is because although the private sector is likely to see stronger demand next year, better conditions, consumers will benefit from lower inflation. The problem is that public finances are increasingly precarious. So the government was planning or was expecting a very healthy windfall from oil this year, but because of the collapse in global oil prices, this has really exerted a lot of pressure on public finances. So investment projects will be delayed next year. Public spending is likely to be quite weak, and this turns me to the major risk for the outlook, and that really is public debt. So if Ghana's fiscal position worsens, if the deficit continues to increase, we are at risk of debt distress in Ghana. Although we don't expect it to be a default, there is increasing likelihood of quite substantial pressure on the government's budget, which could affect the economic outlook and the value of the infant.
All right, thank you very much, Matt, for your time on the show.
Thank you.
Matt Kinniger is the Associate Practice Lead Sub-Saharan Africa at Docker Frontier in London. And Kenya is hoping the end of sanctions the U.S. had imposed on Sudan could stabilize its tea market and open up investment opportunities for Nairobi's firms. The U.S. announced last week that it was dropping sanctions imposed on Khartoum 23 years ago after it designated Sudan as a state sponsor of international terrorism. The decision came after Sudan agreed to pay victims of al-Qaeda terrorist attacks in Nairobi and Dar es Salaam, Tanzania, some $335 million in compensation. Nairobi says the lifting of sanctions will enable free business interactions in the region. Sudan and Kenya belong to COMESA, but while Sudan has been a major buyer of Kenya's tea, buying about 12 million kilograms a year, the scarcity of dollars often restricted smooth transactions. And on the global oil market, prices fell more than 3% this morning on worries a swath of coronavirus lockdowns across Europe will weaken fuel demand, while traders braced for turbulence during the U.S. presidential election week. Brent crude for January was at $36.78 a barrel, down $1.16, while U.S. West Texas Intermediate fell $1.24 to $34.55 a barrel. Brent fell as much as 5.8% and WTI as much as 6% in early trade, hitting their lowest level since May. OPEC and their allies, including Russia, a group known as OPEC Plus, are cutting output by about 7.7 million barrels per day in a pact aimed at supporting prices. OPEC Plus is scheduled to hold a policy meeting on November 30 and December 1. And on metals market, gold edged lower in the morning, weighed down by a stronger dollar while investors awaited the outcome of Tuesday's hotly contested U.S. presidential election. Spot gold fell 0.2% to $1,873 per ounce. U.S. gold futures were down 0.3% at $1,875 per ounce. The dollar index was 0.1% higher against a basket of currencies, lowering gold's appeal to other currency holders. In other metals markets, silver fell 0.9% to $23.41 an ounce. Platinum dropped 1.5% to $836.37, and palladium gained 0.2% to $2,216. And that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwabu.